Overtrading is one of the most common challenges faced by traders, especially beginners. This video will talk about how to overcome overtrading and the tips and tricks that you can use to help you. All I'm asking from you is to drop a like, subscribe, and join the free Discord in the link in my bio. In order to overcome overtrading, you need to understand the definition of it. So I'm going to go ahead and show that to you guys right now. Just in case you guys don't know, overtrading happens when a trader tries to take multiple trades in search of profit in the market. So I wrote this down for you guys, and there's 4 bullet points that explain the things that happen when a trader starts overtrading. The first thing on this list is when a trader takes too many trades in a short period. From my personal experience, this first bullet point usually happens when a trader makes a good amount of money or loses a good amount of money. In a lot of cases, after a trader loses a specific amount of money, he is most likely going to want to get that back. This is why I always say to take a specific amount of trades per day, usually 1 to 2 trades. Win or lose, if you win, you get out. If you lose, you get out. And you might be asking, if I'm winning trades, why shouldn't I take more? And to answer your question, regardless of if you're winning or losing, if you're taking too many trades in a short period of time, you're overtrading, and that is not good to do as a trader. Let's just say you do take additional trades and you end up winning them. If you do end up winning them, there's going to be a day where you end up losing trades, and then because you've won that many trades before, you're going to try to get your money back. And this is all overtrading in your mind. So if you want to get rid of anticipation and impatience in the market, then you need to make sure that you're not taking too many trades in a short period of time in the market. The second bullet point says that overtrading occurs when a trader trades with position sizes that are too large. So what does it mean to trade with the position size that is too large? Let me show you guys. So the more amount you put into a market, the stronger your risk to reward is going to be. So for my example, I'm on Top Step X on futures, and I can show you guys right here. You can see the amount of contracts that I have in this order. Now, the more contracts I add to this order, the stronger my risk and reward are going to be. So let's just say I wanted to make sure I'm only risking $250 again. In that case, I would have to take my stop loss and drag it to a smaller spot so I can risk less. The main problem here that needs addressing is the amount of space that I have with my stop loss. With less contracts, I would be able to risk the same amount with more space for my stop loss. So if you take trades with a lower contract size, or you put less amount of units before taking a trade, you're going to have more range between your stop loss and your take profit, which is generally good. But the more contracts or the more units you put in a trade, the more you're losing if price doesn't go in your direction, and the more you're winning if price does go in your direction. And this third bullet point here is what I want to call emotional trading. The first thing that promotes forcing trades when there are no clear opportunities is taking trades at specific areas of the market without proper confirmation, like displacement. And as you can see right here, we had an order block, and this order block was completely driven out of. And this is a perfect example of why you should wait for displacement at specific confluences in the market. If you step into the market simply anticipating and taking trades off of anticipation, you're going to be stopped out more times than you can even think. The second thing that can cause you to force trades when there are no clear opportunities is when you lose a lot of money in the market. Honestly, when I was a beginner trader, the first thing I was doing after losing was trying to find more setups. Hold on, before we continue the video, I just want to bang this real quick. We go up into this area and we show displacement away from the area. Price retraces and goes above it, and then we move to the downward side right after my entry. Let's just see if we hit this right here. Go to the downward side. Yes. Okay. That's not enough. That's not enough. There we go. There we go. Come on now. Come to my take profit. Come to my take profit. All right, you guys, we just hit this trade right here. This is the live trade for this video. Let's go. Another thing you guys need to look out for when it comes to overtrading is taking trades out of boredom or fear of missing out. You just need to make sure that you're okay with sitting down in the market and just waiting at specific areas. Because I know it's boring. I know trading is not a TV show or something that you can binge on. It's very boring in general, but still, if you want to take this seriously, then you're going to have to be patient. And don't take a trade just because you think you're going to miss out on this bearish momentum or on this bullish momentum. Trust me, there are going to be a million opportunities for you in the market. If you're able to understand patience in trading, then there are going to be way more opportunities once you catch these specific setups that you're looking for. Not only do you take an unoptimized entry, but you put yourself in risk of losing your trade.
Order filled.
And as you can see right there, we just randomly got in the market and that causes us to lose. So now you know that overtrading occurs when a trader takes too many trades in a short period, trades with position sizes that are too large, forces trades when there are no clear opportunities, and trades out of boredom or fear of missing out. So now that you understand these 4 bullet points that explain how overtrading occurs, make sure that you're not doing any of these things so you can become better with trading. Understanding why we overtrade is crucial for overcoming it. If any of these bullet points sound like you, or you want to make sure that you don't have this happen to you in your trading journey, hear me out. I'm going to give you guys solutions that you can do so this doesn't happen. Your first step should be to develop a clear trading plan. And this means you need to define your trading strategy. A trading strategy is a list of confluences that you use before taking a trade in the market. An example of a trading strategy would be price going into this order block, and then looking for a break of structure to the upside, and then looking for a retracement into a fair value gap, and then looking for an optimized entry. You see what I'm saying here? It's a lot of steps that you go through to build a strategy. It generally might take a long amount of time to build a strategy that works for you, but if you're trying to become a better trader, then you have to start now. You also need to make sure that you are establishing daily or weekly trade limits and setting specific entry points and exit points. You want to make sure that you're okay with how much you're risking and where you have your stop loss at. You also want to make sure that your take profit is at a specific area and that you're okay with it as well. The second step is to wait and develop better trading habits. Sometimes you need to zoom out of the market and look at the general bigger picture of what is going on. And this has to do with your time frames and your patience levels in the market. This is a very good example of a high probability setup. We have bullish inducement to the upward side, a swing low created by price action, and then we have the sweep of the internal range of liquidity right here. I just took this entry here at this area where we got a liquidity sweep, and I do expect price to move up to this swing high area, if not beyond it. I generally want to make sure that I win money in this trade, so I'm going to put my stop loss above my entry point in case price goes back down. Guys, this right here is called a trailing stop. This gives you a win-win situation in the market. Once price action goes in your direction, you can have your trailing stop under where price action is currently at. So if price goes down, it's going to stop me out at plus 1,500. And if price continues up to the swing high area, then it's going to take me out at $5,000 in profit. This right here is a good example of waiting for high probability setups when you're trading. I could target up here, but honestly, this is so much bullish momentum. This is why I have my trailing stop here, because if price goes down, I'm still winning a general amount of $2,000. So we're just going to see what happens here in price action. Either way, if price goes down, we're still winning. If we go up all the way to this area, then this is the grand prize right here. We actually ended up hitting the trailing stop here, which is perfectly fine because that's $2,000. Here are some recovery steps that you can use to overcome overtrading in the market. As you guys know, if you find yourself overtrading, step back and take a trading break. Review your trading journal. If you don't have a trading journal, then make one today. If you guys don't know what a trading journal is, it is basically an area where you write down your trades, why you took them, where you took them, and what you think you could have done better. So let me go ahead and show you guys the aspects of a trading journal. So when you journal your trades, there should be a list of things that you write down. The first thing is the area where you took your trade. The second thing is the amount of contracts or units you put in that order. The third thing you write down should be your entry time and your entry price in the market. Alongside your entry time should be your exit time and price as well. Under your entry and exit time, you should have your bias, whether it be long or short. You should have your profit and loss marked out, which is how much you won or lost and why. And then you should have your reason for taking a trade, which is whatever the reason is you took your trade. And this reason should be honest so you can give yourself constructive criticism for when you step back into the market. Reset your trading plan. There might be times where you just open up Top Step X after a certain time and you want to take a trade at that specific area. And this is why it is good to have a specific time where you take a trade. For me, I like to take trades in the morning, so I take trades from 8:30 in the morning to 11:30 a.m. Start fresh with smaller position sizes. I just want you guys to take a look at this. This is the size of my stop loss, which is at negative $250 with one contract. This is the size with two contracts. This small area is the size with three contracts. With 5 full contracts, we only have 3 small pips of moving area within our stop loss. So in case you didn't know what smaller position sizes do for you, now you understand. The more size you have within your stop loss, the more of a chance you have to win the trade that you're in. So the general lesson of this recovery step is to make sure that you're not trading simply for money, but to have consistent wins in the market. You have to remember that successful trading does not come from the quantity of trades, but the quality of the trades that you are taking. It's generally going to be better for you if you take high probability trades at specific areas of the market rather than letting your emotions take control and taking multiple trades at specific areas in search for profits or maybe getting your money back. If you guys have any questions on this aspect, let me know and I will answer them in the comment section. Please subscribe, drop that like button, and join the free Discord in the link in my bio. Inside of the link, I have multiple free courses for you guys, an ebook, and mentorship services available as well. And for those of you guys that watch this video fully, if you comment grow within the Discord section within the next 7 days, I'm going to give you 25% off of everything that I have to offer for you guys. Thank you all for tuning in. Please take care of yourselves, and I'll see you in the next video.